It was a significant day for the Eastern Caribbean Central Bank as the region's top financial policymakers gathered at the ECCB headquarters for the 110th Monetary Council meeting. Chairing the session was Premier of Anguilla Dr. Ellis Webster alongside the ECCB Governor Timothy Antoine and several finance ministers from the region. Discussion centered around monetary stability, financial sector resilience, and economic growth projections for 2025.
The ECCU's growth outlook for 2025 remains positive in the range of 3.5% to 4.5%, with tourism, post-Hurricane Beryl reconstruction, and investments in physical infrastructure expected to drive growth. Cognizant that bold reforms and timely passage of legislation are required for sustainable growth outcomes, the ECCB continues to support a stable and resilient financial sector and encourages the member governments to expedite the enactment of the relevant legislation.
The Council also reaffirmed its commitment to maintaining stability in the banking sector, keeping the minimum savings rate at 2% and holding the discount rate at 3% for short-term credit and 4.5% for long-term credit. Governor Antoine highlighted the importance of these measures.
The minimum savings rate is the rate that you get your interest rate on your savings account. That rate is established by the Monetary Council. So at every council meeting, we review those rates and we put a recommendation before the council. So it's the minimum you can get on a savings account in the currency union is 2%. And that is one of the highest rates in the Caribbean. If it's not the highest, it's certainly one of the highest. I think Belize was at 2.25 at one point. I haven't checked recently to see where Belize is at, but all the other countries are under 1%. So that's something that small savers or any saver can continue to benefit from.
Governor Antoine says the ECCB remains committed to ensuring the strength and stability of its financial system. With reserves at 5.5 billion EC dollars and a backing ratio of 98.2%, the currency remains among the strongest in the region. Beyond monetary policy, the Council addressed regional challenges such as high intra-regional travel costs and food security.
Despite some improvements, there is still need for more regional action to address the high cost and inconvenience of intra-regional air connectivity. The current situation is a major constraint to trade and faster growth and is inimical to the big push.
The $25 million fund has been allocated to boost food production and reduce the region's dependence on imports. Meanwhile, efforts to improve financial inclusion are also in full swing, with steps being taken to simplify the process of opening bank accounts. For the DBS News World, Zane Romulus reported.